We haven't met before. My name's Chris Holcomb with Heritage Financial Advisors, and we're going to talk about why life insurance, how life insurance plays a role in your plan, and where it's a good fit. So my information's up there. I need to capture it. I'll also leave a slide up at the end of the presentation so that you can jot it down if you need that contact information. We're going to talk about getting more out of life insurance. We're going to discuss adding life insurance to your portfolio if you don't have it already. We're also going to explore how life insurance can help you reach some of the goals and go beyond what's expected. By the way, I am licensed to talk about life, health insurance, disability insurance, long-term care. So I'm an agent for all those products. And we're also a broker, so that we don't have any particular brand in mind. We just chose Lincoln for this presentation because they had a good presentation on life insurance. Lincoln is one of our carriers, but basically what we try to do is find the best solution, the best fit for your particular situation. So it's called life insurance for a reason. But really what it comes down to, it's about a responsibility of love. It gives our family security to know when you're no longer there to provide income, where's the protection come from? And how do we make life easy for the folks that remain? It might mean that a spouse doesn't have to take a second job. It might mean that children can go to college. So the question is taking care of your loved one the number one reason why you're either getting insurance, life insurance, or considering adding to existing policy? Life insurance is also for the living, and that includes you. So when it's used to its full extent, life insurance can help you reach your goals. It can play a vital role in increasing your portfolio with tax advantages and protect and build your wealth. The bottom line, life insurance is a love decision. The first off, life insurance is a way to protect your wealth. Because what it does is it transfers the death benefit, income tax free, to whomever was named as a beneficiary. And it could be family members, it could be friends, it could be a charity, or it could be a combination of those individuals or entities. It also gives you ability to access additional wealth. So with cash value life insurance policies, you have the ability to potentially build cash value and take a loan against those dollars, which doesn't affect your tax bracket because it's considered when you borrow, it doesn't come as income. So it can help for lots of strategic planning decisions that we would discuss together. It also can help you build wealth. So again, we're talking about cash value life insurance in this case. Inside of a life insurance policy, it grows tax-free and again, borrows tax-free. So potentially to provide some income or just build additional tax-free wealth. So a good application of this would be just talk to a gentleman, for example, who's able to max out his 401k at work, makes too much money to contribute to a Roth, is looking for additional ways to build wealth. So this could be a good example for that person. Life insurance, in addition to family protection, it's against the loss of income, or maybe it can help pay for a mortgage or other debts. So there's lots of reasons that you might want to look at protection of life insurance. Again, against the income loss, maybe you took on an unusual amount of debt and you want to protect against that, or maybe you just want to make sure that if something happened, you can pay off the mortgage. It also can be a future cash reserve. So cash value life insurance, again, is not counted as income. It's also not counted on the FAFSA form for applying to colleges. So when you make that application, those dollars aren't counted against what you can contribute to college. So it can be very strategic if you have young children that you're saving for college for. The other thing is a tax efficient supplement to retirement. So we talked about this a little bit already. You because a lot of people are concerned about outliving their savings, you can tap into your life insurance again to help supplement. That would be the cash value life insurance. Then another one, as you age, life insurance can be used for some long-term care protection. So again, you could access the cash value life insurance or potentially look at marrying life insurance with a long-term care rider. So long-term care rider gives the ability to access your death benefit as a living benefit. For example, let's say you had a $500,000 life insurance policy with a long-term care rider and you needed coverage. You would have the ability in that example, if you had a $500,000 death benefit, to access up to $500,000 worth of long-term care, home care, assisted living, nursing care, or if you didn't use those benefits, then it would be available as a death benefit, or it could even be a combination of those. The other thing is a legacy or charitable gift. Some folks just want to maximize their giving at their passing. So life insurance is a great way to do that. For the small premium payment you make, you're able to gift a large death benefit to one of your charities or to some cause that is certainly important to you while you're living. And then there's also, there's also protection for businesses. Lots of ways you can do that. I don't think we have any businesses on the call right now, so I'll be glad to talk a little bit more involved, but it certainly has some business protection elements as well. So know your options. Probably most folks are familiar with term insurance. It's the lowest cost. It's for a set period of time, and it's a guaranteed death benefit. Okay, the amount never changes, never goes up, never goes down. So your payments stay consistent for that period of time. If you had a 10-year policy, for example, you'd pay the same premium amount for the full 10 years. Once the 10 years expires and your insurance cover expires, you're no longer making payment. So this is really good for the young family, or if the funds are really tight and you still need extra life insurance, it's a great way to fill that gap. We also recommend that folks have at least 10 to 12 times their income in life insurance. That way, if something was to happen to a spouse, you still have at least 10 years, approximately 10 years of income to support the family, and then they don't have to make a really radical decision about what to do going forward. We also recommend that you have at least half of that coverage in private pay. So let's just say that you make $100,000, so that 10 times would be $1 million. You could probably get some of that coverage through work. Typically, it's one time your salary, so say $100,000. There's a $900,000 difference there. Get that $900,000 covered with private pay. The other advantage to that is that if you change jobs, you still have coverage. You don't have to try to take your group coverage and convert it into an individual coverage, which would be potentially very expensive. And then we look at the permanent policy. So if you need a death benefit for a lifetime, so there could be lots of reasons for that. There could be a special needs child. There could be a gift that you want to make sure you give to a church or charity. There could be a legacy that you want to leave. There could be lots of reasons that a permanent life insurance policy could be a part of your plan. So the death benefit never goes away as long as you make the premium payment. And it does allow some accumulation and cash value options as well as tax deferred growth. Certainly another application for life insurance. So which one's right for you? So when you consider term life insurance, you're just starting out. That's a great tool or great option, solution for the getting life insurance and economical for your budget. And certainly we want to talk about it just to make sure term life is the right fit, and also if we're getting the right amount. Permanent insurance, a little bit more complicated product. You could start off, with a young family using this product, but typically it doesn't give you the amount of coverage, and the cost might not be a good fit. It can also be a great tool for saving for additional retirement dollars, potentially college tuition, building wealth, or any other goals that you might have, including legacy, leaving money to church or charities or family members. Okay, so let's compare a little bit more. So we already talked about term insurance is temporary coverage. Okay, it's going to be the lowest cost, which is super helpful, as opposed to cash value. Okay, a permanent life insurance going to give you cash value, going to help potentially with long-term care expenses if you have the rider. Can also help with legacy or charitable giving. So again, if you want to leave some money to charities, friends, family, etc., or a combination, certainly permanent insurance is a great way to do that. Otherwise, what you have to do is set aside money in your nest egg to do that. And that could be dollars that you need for your own care or to pay your expenses. So using life insurance, in my mind, is a much better way to do it. And it guarantees that the coverage can get done as long as the premium is paid. So the lowest cost insurance is term, and you can see it has doesn't have as many features, but certainly fits the bill for several applications, including young family, including lower entry point for the premium. There are many types of permanent insurance. Universal life, that's sometimes talked about as like a permanent term. There's not cash value per se, but you certainly have the ability to make it last a lifetime. So some folks opt for that. The index universal life is another option there. Variable means wherever you see variable, that just means that it's invested in mutual fund type products. So it has some growth potential inside in addition to your contributions. Survivorship would be more of a second to die policy. So again, you have a spouse or husband and wife, excuse me, and you want the payment to be done on the second death, so that it would cover that need, whatever that might be. And there's several applications there. Again, special needs child, giving a gift, leaving an inheritance, etc. Any questions, certainly give me a call. Okay. So let's look at the smart way to buy life insurance when you're young. The advantage of buying it when you're young is your health. That's the number one. And which means your premium rates are going to be lower. So good health, lower premium rates. So that's a good time if you decide, term is my best fit, buy the longest term that makes sense for you. So for example, if you have young children, I always recommend that you buy enough coverage to last till the last child gets through college, because that's your biggest risk right there. That you want to make sure that something doesn't happen to you while they're in college or before the last one enters college, so that you have the ability to help the surviving spouse pay those costs. You can always add to life insurance as you get older. It's just going to cost more every time you turn a birthday. Every time you have a birthday and you try to buy more life insurance, it's just going to cost more. So getting it when you're young and good health makes a lot of sense, especially for couples. Even more important when there's children involved. Not as much of an application for a single person, but still there are some cases where life insurance would make sense. Very affordable. Again, the term, by definition, it stays the same. It's for a fixed period of time. It certainly will cost less than cash value. About 2 in 5 households don't have enough life insurance, so it's really important this is visited on a regular basis. Family changes, again, additional children. It could be there's, mom and dad live with you now, or children boomerang back. There'd be lots of reasons to revisit life insurance, or maybe children leave, they launch per se, and there's not as many people depending on your income, so you could potentially decrease your insurance. But it certainly makes sense to look at it and have a professional guide you through that. The other thing is long-term care. So we talked about that. That needs to be a part of your retirement plan. What's your solution? Is it leaving assets inside your nest egg? Is it buying a separate policy? Is it using a rider inside of a life insurance policy? But it's certainly something we want to make sure that we talk about. So that's just, again, one of the products that we can help you with if you want us to chat about that. Often should you meet with your financial professional and review your life insurance? At least every 1 to 2 years. And certainly when there's a life event change. Again, there's a marriage, there's a divorce. Unfortunately, there could be additional children. There could be, additional folks that are dependent on your income, maybe your mom and dad or something like that. all kinds of reasons to change. Maybe one of your beneficiaries is no longer with us, has passed. So certainly review your beneficiaries, make sure they're up to date. But there's a lot of reasons to review that. So here's just a couple more. Certainly in marriage, certainly a great time to do that. Typically, I find that just folks haven't thought about it yet. And everything else about combining household and accounts and all that's part of their program. And then, of course, the opposite would be divorce. That's certainly a time to revisit the life insurance as well, especially if there's still children, dependent children at home. Very important that we get potentially some additional coverage in case that was a home purchase. You didn't know, you don't want the surviving spouse to be saddled with maybe a big debt. Change in employment. Again, as I mentioned before, we recommend having at least 10 times your salary in coverage. You change your employer, maybe the employer was covered one time, your salary 2 times, etc. Certainly it's going down, and maybe your new employer has a different coverage plan or benefit plan. New baby, absolutely. You certainly want to beat that up because at least temporarily, a lot of times one spouse is changing their work schedule, maybe going part-time or just taking a pause in work. So good time to revisit that. Business ownership, lots of applications there. That would be a separate discussion. Parents join the household. We talked about that a little bit. It could be that they're dependent on your income. Maybe they weren't able to save very well. They have Social Security or something like that. They need the extra help. And then certainly retirement, life insurance, especially the cash value life insurance, can be a great way to grow tax-free and also borrow tax-free for additional retirement. So with that, the rating agencies that we look to for life insurance is the AM Best. So Lincoln is a top-rated company within the AM Best. So we're very proud to certainly promote them. One of the things that Lincoln does well is they have a lot of options to suit your needs. So whether it's like a term product, a long-term care combination, whether it's cash value life insurance, etc., they can help with that. What's nice is Lincoln has a long track history. They've been in the business for many, many years. So certainly a company that you can count on. Again, I'll just mention that we have lots of years experience in this as well. We are a broker, so we're always looking at what is the most sensible product for you, what's the best fit for you. And certainly I look at the rating of the company, because obviously this is something you're not buying for now, you're buying for the future. And what's the experience of the company that we are looking to work with. So with that being said, we're here to help. Happy to be that financial professional in your life. If you don't have somebody, just discuss what's happening in your life. All those changes we mentioned about in previous slides are all reasons to talk about life insurance, to revisit it. Is it the right type? Is it the right amount? Do you have the right term, etc.? And what are you trying to accomplish with the life insurance? So if you have any questions, if there's anything you want to go deeper on what we chatted about, certainly give me a call. There's a contact information there, address, phone number, email, website, etc. Happy to engage you. There's no cost to have a call, set up a meeting. We're very much available to go through that with you and just help you with those decisions, and we'd love to do that. So with that, I will go ahead and close out. Let us know if we can help you in any way in the future, and have a great evening.